So it's good to having Eric here today in
Hello.
person. Today's online information session is very simply basically to give you guys understanding the commercial lending. Because I'm sure there are many of you guys or may have clients who are asking if we do commercial lending. And there are a market, which is a huge market for commercial lending as well. And I want to make sure everybody who understanding what the question to ask, what kind of document to collect, how to differentiate the products, so we can give out the first mortgage, the second mortgage. So recently we just pulled maybe just close to $100 million for specialized for commercial lending. And we will classify the lending on the commercial to different sectors. So basically, you guys probably will see the screen is commercial lending. So commercial lending, all the assets either with the cash flow or without the cash flow. So with the cash flow, for example, commercial plaza, apartment rental incomes, or industrial complex. So everybody know if you have a client buying a small strip plaza or big large plaza, it require financing based on the income. So income normally have two components. Let's say gross income, let's say is $1 million, but the $1 million will some of the money will pay for the property tax and the maintenance of the plaza and the ongoing repairs, or maybe sometimes, snow removal, grass cutting, this kind of expense. Then you brought down to the net income, let's say $1 million gross income, maybe they are 1/3 of operating expense and 2/3 of net income. So when people asking what's the net income of the plazas, normally will be deduct from all the expenses associated to running the plaza. So this normally how we generate net income, the gross incomes. And as well as industrials or commercial, they are very similar. They always have a property tax involved. There's a landscaping, snow removal, repair of the buildings, changing light bulbs, maybe repairs the windows here and there. That's expenses. And to giving this understanding of the income, the net income, we will determine how much the mortgage will qualify. So based on today's ongoing commercial banking financing for buying a cash flow income assets, is between 5 to 5.25% interest. That's required the principal and the interest. Normally amortization is 20 years. Okay. Any people have questions here?
Yeah, feel free to ask if anyone have a question. So far. If no, we will just.
Okay, so let's then talk about the non-cash flow, without cash flow land finance. So lots of you guys probably know people who bought a piece of land. They said, we're a developer, we're gonna put maybe 20 houses there. So they go to for submissions, go to the city, do lots of study, including the environment studies, landscaping study, architect study, site plan applications, civil study in order to get the land approved. So land value really depends on the appraisal value in terms of what kind of the products they can put, or as is at a farm, or only with the farm incomes, or a land with a future development but it's not approved. So these are the two type of the assets with income, without income. And without income, the land financing, the rate, ongoing rate at today's first mortgage, you're looking at about 10 to 12%. So this is the ongoing interest only financing. So typical questions, and the lender will ask if you guys have any clients and what you need to prepare. So in terms of land financing, in terms of future development, people always asking, is this land for development? What's about project? So normally it's about for condo development, subdivision, townhouse, single detached home, or this will be split to two or split to four, four semis, this and that. And also in terms of required ownership details and background. The owners of details because mostly the purchaser and the landowner are number company. The reason they have a number company because it's operating business. There's a cost associated, the expenses.
Work-related injury while I'm waiting for my surgery. I'm just learning about this.
Okay, so the number company normally they have a multiple shareholders. For example, the company 123 Ontario holding this piece of land, they may have up to let's say 200 investors, everybody chipping the monies. So this is the shareholder agreement who actually own a title for future development. The past project experience really associate to the developer or the general manager who actually over and supervising the development project. So based on their previous experience will make the application process much easier because the lender tended to giving a lower cost of borrowing to people who already have a current projects or have done some project. They have good exit strategy and they made the money on the development. So organization charts normally is also very new to you guys. So basically sometimes with multiple ownership, A and B group may be co-owning the property, and in the A group, there are multiple small individual company as an individual owner. So lots of people, they said, oh, we have a limited partner structure, we have a GPLP structure, and they had to explain who's the limited partner, who's the general partner. General partner, normally the general manager was retained by the ownership of limited partner to operating the business. From the application, coordinating the contracts, finding the consultant, where to spend the money, budgeting and executing, dealing with the city. The guarantor information normally is the general partner if they are the manager of the company who do the development. Sometimes also the guarantor also the owner of the company. Sometimes it can be two friends, can be father and son, they are the guarantor because the operating company is a number company. So mostly the lender need to have a personal guarantee for the mortgage as well as the company. The next requirement, normally they want to know the people who borrow the money, so the guarantor have a net worth statement. So net worth statement, normally you have all the assets, including the real estate, cash, stocks, GICs, and based on their liability, mortgages, credit card balance, car loans. So give a comfort to the lender in terms of the financing as one of the criteria. And agreement of purchase only involve when it's a purchasing target asset, not really for refinancing purposes, right? And you guys probably see a high level pro forma understanding the density may be increased, or maybe the land have a future use can increase the value from let's say $2 million to $4 million based on the application here and there. So basically the lender asking what's the future values, how you come up the exit strategy, are you planning to refinancing, or you guys approve you sell this piece of land. It's really case by case, but our underwriting department will helping you if you guys have any questions. Mrs. Kim and the principal broker will helping assist to helping you to understanding the documents, or either for application purposes, for due diligence purposes, or just for engagement purposes. Also, there are some current status, if it's in the application process, already approval process, or this is a land assembly, this is secondary plan, or this is draft the plan approved. So there are different kind of stage of the land. So at the preliminary stage, it's tended to be a land value. At the final phases, normally the site plan proof, which is more value added to a development stage. So sometimes you see a land was purchased 2 million with approval and probably will be appraised at $10 million. So that's why development is very lucrative business, and the lender like to deal with people who have a detailed business plan, they have experience, and they have excellent strategy, or sometimes their land financing will be paid out when the construction start. And the ESA environment phase 1, phase 2 geotech report is normally to give you understanding of the hydro levels with environment issues, if the land is contaminated. Also, in terms of down payment, source of down payment, whether it's a gift or is a shareholders' equity to the joint ventures, or the money actually raised or by collateralize the other assets towards purchasing. That's only apply when buying a property. For refinancing, some of the questions don't really apply case by case. And also associate interest payment. Sometimes borrow $1 million to $10 million. There's a monthly payment at a 10 to 12%. So lenders sometimes are asking whether you have a source of income or you have additional source of money to come in or inflow to carrying the cost to the mortgage payment. These are type of the questions, and the typical lender were asking for land financing. It's different than plaza shopping malls or industrial building. I know there are lots of people who buying for industrial condo units for their own business use, and the requirements tentatively it's much less information required, as well as the interest rate. So I like to having a Q&A if you guys have any questions to ask.
And also, if any agents have their clients interested in commercial lending, just feel free to ask now, and then we can look into it and then maybe help you and assist you for more information if you need.
No questions, everybody
Yeah.
100% on this?
Yeah, even if your clients are looking for a small business loan on your restaurant, you can feel free to ask. And Rex is the professional of those commercial lending, and you can always ask him. Yeah.
Hey guys.
Yeah, I think I can ask one question. Hi everyone. So for the land financing requirement, is it the same for if the client wants to do like a small business financing? So like, brand new, and they want to maybe buy a piece of land and make a small office there, or does it pertain to the dollar value of the land that basically makes these requirements?
So my understanding, the clients want to buy a piece of land and build out a workshop.
Yeah, exactly.
Those things, right?
Yeah.
And so anything to do with the land is typically the land financing, and anything to build out on top of land is considered as a construction financing.
Oh, okay.
Okay?
Got it.
So let's say the land worth $1 million, $500,000 goes towards the construction. So normally we will do land financing just to purchase land. After purchase land, you need to have a proper drawing and the permits from the city, the municipal, right?
Yes.
Once you have obtaining that, then you will have a budget. Let's say, it costs blah 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 blah. Add together about $500,000. Where do I get a construction financing? Be able to get a construction based on the cases up to 100%.
Okay.
Construction financing. And sometimes the lender like to give you the construction to pay off the existing first. Maybe this person bought the land 2-3 years ago, and still have a mortgage. But imagine the land is worth $1 million. They bought $500,000 construction. The build out, the final building without income, maybe worth $2.5 million, right? So we have to assess the new build out value. So based on the build out value, let's say $2.5 million. 25% financing. Okay, you minus the existing the first mortgage, how much equity left? Maybe we can do 100% financing.
Got it.
So it's a reverse calculation based on the future value as well the current mortgage status, right?
Got it.
In terms of small business loan, it's
Mhm.
financing based on the goodwill. Let's say I give you example. Oh, I see McDonald in, let's say Square One for sale.
Mhm.
But I'm buying a business. I'm not buying a Square One shopping mall, right?
Correct.
So the business it has its own goodwill because they have a profit, right? After you receiving $3 million revenue, you pay your rents, you pay your food costs, you pay your loyalty fee, you pay your employee wage,
Yeah, franchise
other
cost and
thing,
everything.
utility. Say, oh, I'm making $1 million net profit.
Mm.
I'd like to spend a $3 million to buy this business because somebody offered me an opportunity for $3 million. I see the opportunity I can pay off in 3 years, and I like to continue to be the owner for maybe the next 10 years, 20 years. In that kind of cases, so the purchaser is not buying the property, is buying the goodwill.
Got it.
The improvement, which is a renovation, the kitchenwares, right? The chairs, the hood fan, walking cooler.
All the equipment, yeah, the
Equipment,
tangible
right?
assets, yeah.
So the channels, right? So the channel financings, they are small program. It's called Canadian Small Business Program.
Really small
The
program, yeah.
commercial bank, let's say all the large banks, in the BDC. We
BDC, yeah.
yeah, we also helping the mortgage agent to packaging deal to redirect to a designated loan officer to oversee and review the application, because there are lots of people, especially the new immigrants, love to be a small business owner.
Small business owner, yeah,
Right.
correct.
All right. So this require two major important things. I want you guys, since you asked questions, I like to answer for all of us. So the applicants, the minimum credit score, mostly the bank prefer 680 plus.
Yeah.
Second, they need to have a business plan. Let's say I'm taking the existing McDonald's, but I will increase the revenue by 15% every year consecutively because I used to be a chef, or I used to managing a retail store, or have cooking experience. I know how to save the cost. I'm good at customer service. So you can project, let's say 2025, 2026, 2027 on the profit side. So it's a business plan with templates, and the bank require BDC loan as a part of the requirement. Also, as well, a commercial AIC appraiser, there are only 6 to 7 appraisal company in GTA or in Ontario is accredited by the banks and the BDC to do appraisal on site. Because how to assess the goodwill, improvement and also chattels, you need a third-party appraisal. Right? Can be 1 million, can be 2 million, can be $500,000 based on the total the leasable square foot of premises, and then what kind of equipment, cooking wares, including the renovations, there's an extra. So you need the appraisal report from accredited appraiser. The last is the application in-person meeting with the bank officer who specializes for small business. And normally how you pay out as an agent, because the submission to the BDC or the Bank for Small Business Loan, they don't really pay the commission to the agent directly. So there may be a referral program or a representation agreement will be charging to the clients when they obtaining the loan, and they have a letter of direction to the lawyer when they're receiving, let's say, $500,000, and the $5,000, $3,000 goes to the mortgage agent who are able to arrange and connect the relationship and the quality, everything, right? So this is how the small business loan works. There are some details because I'm trying to finish our meeting very quickly in the certain way, but
Of course, no worries. Yeah.
but I'm open for offline discussions.
Sure.
And calls, and not only me and also Joe, Ryan, Aaron, we all here to help in terms of the residential deal, commercial deals, small business loan deals, because experience is very important. When we packaging the deals, we have to marketing the deals to the lender and make it presentable, right? Because just collecting information piece by piece, likely you're not gonna sell to the lender, right?
Yeah.
And the lender will normally ask me these questions, so we like to prepare everything upfront. So we increase much higher chances to get approved and less time to wait for underwriting, because every borrower they want ASAP. They want to get answer very quickly. They want to have a term sheet discussion paper. The more we prepare, the easier to get. And the more easy to get a commission to finish the transaction, right?
Yeah,
So do-
100%. Thank you so much.
So my question is, so does the commission normally get rolled into the amount they're borrowing, or is it a fee they have to pay generally?
So there are two ways, right? Let's say a typical deal based on the percentage, sometimes it's a flat fee, or everything. There are no standard, as long as the clients and the agent are willing to negotiate and putting something on the paper. So most of the small business loan, let's say we are obtaining, let's say $400,000 small business loan, let's say $5,000 is paid as a commission payout. So on the payout day, let's say the loan will be approved and then released to the clients through the lawyer. And there's a letter of direction, $5,000 to the lawyer. So the clients got 450,000 minus 5,000 fees. That's the balance they will receive. And the fee will be cut to the brokerage and redirect to the agent and disbursement on the same day.
Cool.
Did I answer your question, Aaron?
Yes, you did.
Kira?
Does anyone has any question about small business loan or any commercial deals?
No, I think you have answered my questions. Thank you so much.
Thank you, Kieran.
Thank you.
So is there any other questions associated with this? So I can basically move to next slide. So lots of the questions for borrower, because lots of borrower, they whether know or not, they're qualified on fees and rate, the term, sometimes as an agent, we have to have a knowledge. The better knowledge we have, better understanding the products we have and the lender expectation and preference, it's much engaged to the clients easily and able to finish the transaction. So there are a few questions in terms of mortgage qualifications, things I like to discuss for a mortgage approval. How do I qualify for a mortgage, for commercials, what the key document required for mortgage approval. This is in terms of all the residential commercials, right? Because people who want to buy a property, often they are referral to you, or maybe you have a social media, people start asking, or they are first-time home buyer. They know they want to buy something, but they don't know what requirements they need. So mostly the factor we look at as buying a property residential is based on the purchaser's credit score, income, whether they can service in the mortgage payment or any fee associated to the property, including property tax, hydro utility bills, right? So that's a very typical people's need to prepare, understanding what they are, so we can pre-qualify. So normally the ratio is whatever your income times 4 to 5 times, that's your approval mortgage amount based on the stress test. Let's say a typical individuals and family, they're making $100,000, they can get a mortgage up to $500,000, $500,000 mortgage pre-approval or approval. But some people say, you know what, I have additional cash. Maybe I have a $600,000 in the GIC or stocks or cash on the side on top of whatever I earn yearly on $100,000. So then there's an equity program we can able to helping them to increase their borrowing power up to 1-to-1 ratio. So 1-to-1 ratio is, let's say I have a $1 million in the bank account, and I'm able to get $1 million mortgage. Assume there are no other liability or other mortgage you have. You buy the first property with the cash you have in 1-to-1 ratio. Plus, let's say I have making additional $100,000 to $150,000 income a year, so I'm able to increase my mortgage maybe to up to 1.4, 1.5 million. So this is more likely is a guideline for mortgage approval based on their income assessment. But this number can be fluctuated based on the interest rate. The interest rate go up, that meaning the mortgage amount is diminishing, right? And as well as the interest rate decrease, That meaning the same person who have the same net worth, same cash, same income, they're able to borrow more based on the current incomes because the borrowing cost is much less than before. So you see when the rate is low, it's easier to access the mortgage and cheaper money. When the rate is high, less money you can borrow because you have a limited income, right? To getting approval for mortgage for commercial property, normally packaging deals and with discussion approval, normally up to 5 business days. If most of the question to be answered and cleared. And the funding normally is if the commitment signed by the borrower and the lender, normally within 3 business days. And they are required 2 lawyers. Borrower need a lawyer to present in the borrowing interest, and also lender have their own lawyer to fund the deals. As agents, we had to coordinating the documents, signings, as well as updates regarding the process, right? And then normally we always tell the clients because commercial deal will take longer to approval, don't leave to last minute because you want to buy something and close in the next 30 days. Because commercial application is case by case, not all the lending requirements the same, not all the lenders have a same appetite. But residential deal is more straightforward, right? Really depend on the debts, their liabilities, mortgage incomes. And I do mention about the interest rate for commercial as of today. If it's income generated properties commercial, so for commercial, you're looking between 5 to 5.5%. For land financing, is between 10 to 13% in the first mortgage. There are second mortgage options, really depend on how much equity involved and what's other assets that can be collateralized to financing on the purchaser. Fair market value is to be determined normally is either based on appraisal values, and also there's some system we're using to look at sold history within the area or similar property in terms of residential or condominium, much easier to access. The lender normally for institutional lender, they require appraisal report appointed by the lender, not the borrower. And sometimes it can be lower than the original purchase. Sometimes people overpaying for the property, or some of the appraiser is more conservative due to the market high rate and the default rate. This can be various. Our job is finding the lender and a good appraisal and fund the deal within a reasonable time and a cost, right? You guys have any other questions?
Move forward to the Q&A part.
Okay, so there are the Q&A questions. I like to having everybody not try to limit it to only commercial deal. Any questions in terms of lending or underwriting, how to asking questions, what document need to be associated, please asking, be free, because we are here to help. This is educational seminars.
Yeah, feel free to ask if you are experiencing any challenges or questions when you're making a deal, or even if you don't know how to talk to your clients, feel free to ask. We are here to help you.
What's the best way to get around the guys that are just rate shopping?
Okay, so that's very typical because guys that don't really know the market, they like to shopping.
Yes.
Because these other people haven't done any business with you previously. So I always say that rates can be different because even buying the same property based on your credit, your income, your debts you have, the rates can be different, right? So I always like to asking a few questions to establish the relationship. If you're able to establish the relationship first, and pretty much you will be their forever mortgage agent. So rates is equivalent within a range and a reasonable we can give, but the most important is whether this person have this buying a second or third investment property, or if they have any credit history is not paying or delay payment, that will affect to the interest rate, right? People have a high credit score, let's say 780 plus, versus a guy have a 500 credit score buying the same property with the same income. Their rate is completely different.
Right.
Some people have very low credit score. They even get a mortgage application declined. So the more question you ask, likely you will engage the conversation, and then mostly you will get the business. That's what I always tell people.
Mhm.
Right? And the people who ask the rate, there are two kinds of people who, knowing they have the strong income, they have very high credit score, they have high equities, they just want to shopping for cheap. Sometimes you can even offer the buy down rate, some of the numbers as commissions you can subsidize to buy down a rate to be competitive. But mostly peoples who have a mortgage rate because due to their incomes not qualify, or they have limited incomes, or maybe they have a history with a credit. So your job just let them to focus on how I able to get you the mortgage first, right?
Okay.
Then I can, because we have about 65 different lenders, including A lending, which is all the major banks, trust, also insurance banks. As well, also we have B lenders, including a smaller bank, as well as private lender. Private lender or MIC, these only apply for people who have either very low income, but they have a good down payment, or they have some other asset that can collateralize, and they want to buy the property. They want to bridge this transaction, let's say for 6 months or 12 months. After 6 to 12 months, maybe they want to refinancing or roll back to the bank, right? It's a short-term solution, but your job is helping them to close the mortgage. This is, I think, it's important. Mostly people already come to see you only that kind of two scenario, right?
Okay. And also, if your client, if you're trying to negotiate with your client, is it easier to negotiate with the A lenders or the B lenders?
So, lots of the people going for A lender because it's a straightforward deal. The guy
Right.
is looking for, let's say, a government jobs for 15 years, senior officer, straightforward payrolls, CPP, RRSP,
Yeah.
and strong income, right? And they
Right.
buy a very affordable property. So our job is getting them better rate, right? But negotiate A and B lender tentatively the cost a little bit higher. But people who are going after the B lender because maybe they are not have the best interest, best credit score, or maybe their income not there, but they have a decent cash income, or maybe they are self-employed small business owners. So certain lender prefer certain type of clients. They also compete in the same market. CIBC can be competing with Scotiabank. Like say Bank of Montreal prefer a rental income with plus ownership. So they're not really necessarily competing with the rate, but they try to capture kind of their own niche market, the market share.
Okay.
So based on the applications, as management, our underwriters will give you the best option, whether they go to A lender or B lender based on their applications and their history. So that's why the KYC, knowing your clients, let them to fill out their personal application information and understanding their stories. This is important for agent to knowing your clients, right?
So basically the contract that the A or B lender are going to send you over, you can't negotiate any of the terms within those papers.
I only see if they have another offer on the table. Let's say, for example, right?
Yeah.
Michael, I have an offer from Bank of Montreal. My rate is 4.6% for 3-year fixed. And this is the property I own, blah, blah, blah. And can you give me a Scotiabank, maybe beat at the 10 to 15 basis point, right?
Right.
So let's say you do a submission looking for pre-approval for this and that. And if the rate is not the best, sometimes we have open a broker channel, say this is the offer on the tables, this client information you have submitted, you have all their files, but can you beat that rate by 10 to 15%? So even let's say the rate is the best from Scotia, or they offer from Bank of Montreal. Some clients maybe prefer Scotia because even Bank of Montreal give me the same rate. I just don't want to do business with Bank of Montreal at all. I just don't like their services. I don't like their branch services. You never know, right?
Right.
Or sometimes, you know what, the rate's the same, but me as an agent, and I like to help you maybe because, you know, a lender, the commission between, let's say, 40, 50 basis point up to 100 basis point. So a $500,000, $1 million commission can be $10,000. Sometimes, you know what, let me buy down you by 10 to 15%. It's $1,500 to make you happy because I like to have a business with you and I like to continue a business with you, or I like the referral from you, right? So this is your own business. This is the own business you like, and depend on how you do, because everyone operates a business within a guideline. As long as it's lawful and reasonable, I think the clients can do business with any mortgage agent, but they choose to do business with Michael because you have something to offer and they like your personality, they like your professionalism, or sometimes you're willing to negotiate, you know, as an individual, as a practitioner, right?
Right.
So there can be various reasons, or maybe you give to a bank they love. They said, just get me on the RBC. I just don't want to deal with TD at all, right? That can be another reason too, right?
Can a B lender ever beat an A lender rate, or is that never going to happen?
B lender normally they ask a higher rent, higher interest rate because the deals normally will go to B lender because A lender is not really
Interested.
kind of cases. So they were charging higher interest rate for their premium, the risk tolerance.
Okay. Okay. Thank you very much.
Okay, and I also tell you, sometimes a lender with open mortgage can be up to 10%, or 1 year mortgage rate can be 10%, can be very high.
Right,
But
right.
we have an advantage over B lender with 3 years or 5 years longer term, right?
Right. Okay.
So that's the only scenario if the B lender you have a 3-year mortgage and you have a 1 year mortgage open with CIBC. So CIBC rate can be higher than the, let's say, B lender, right?
Okay.
That's a very good question, man.
Thank you very much.
Any other questions?
I'll ask a rookie question if that's okay.
No, of course, we are here.
Yeah.
We are here to help. If you have a more senior experience, you can share with us, right? Nobody is perfect. Nobody knows everything.
Okay, well, I'm definitely in the not know everything category. I just was thinking about lead generation. So obviously we've done some talk about social media and getting things out there, sort of as one avenue. I've connected with some real estate agents to, you know, offer my services to their clients. And I just didn't know if there were anyone that had any other suggestions just around lead generation for people getting started.
Okay, so you want to get the leads for mortgage. Let me ask you, who needs a mortgage? Homeowner or purchaser, right? There are only two kinds. I already own the property, I'm going to buy a property, right? People who selling property, they don't need a mortgage. Or they already have something arranged. So there are a few channels you can get leads, okay? But I want to tell you which is the cheaper one. Real estate agent, of course, they're the cheaper one because their commission is aligned with your commission. Because if you're able to get a financing for them and they get the real estate commission protected, every transaction, buying, selling, most of the time you require financing. Rarely is a cash purchase. So the more people you reach out, the more real estate agent you have contact in person or wine dining or whatever the sorts of form of contacts and point of contacts, it's very essential. Because right now the real estate market is kind of slow due to the high interest rate, right? You basically planting the seeds right now, and in 3 to 6, 7 months, the rates drop. Likely all the more real estate agent will get much busier. And then you're the first person who made the contact when they're not busy because you made a good impression to them. If they're too busy, don't have a time to meet and talk about the mortgage, they just want to finish the deal transaction. I think that's a very good channel to have. Secondly, is there are also lawyer. There are lawyers who have also experienced the closing. Let's say, for example, the deal supposed to be closing today. And the last minute, the lender back on the deal. The deal still need to be closing, the lawyer try to extend the closing with the seller for another month or 2 weeks with some penalty. These are the lawyer, if you have a connection with, say, you know what, I have a last minute resource, I can fund a deal in 3-4 business days, give me the deal. So they want to call you as well, right? Of course, the homeowner, it's a referral basis. Mostly people tended to have a high experience closing it with a referral. So any people you know who own properties, they need to get their mortgage renewed within average between 2 to 3 years. So average mortgage in Canada, the term is about 2.5 years. So every 2.5 years, they either have to refinance in the mortgage or changing to a different bank. This is a very good resource. And I'm sure that hands of people, you know, they own properties. They will call you when their maturity come. You just tell people, give you 3 months in ahead. So I'm able to secure the rate. Don't give me to the last minute so you can build a pipeline. Also, there's a group of Facebook group or there's social media talking about you can create your own topic and channel. Lots of people say, you know what, I know some of the agents who have experience, they said that we create some forum, right? And asking all the people in that forum, what's the 3-year mortgage you are recently secured with the bank? Can you share with other people? So you suddenly you're starting the conversations and activity there, and then most of people give you the feedback and leave notes. Those are homeowner, because nobody will discuss their mortgage if they don't own the mortgages, right? So you're able to getting a database, so you can start mining and working on this type of clientele as well, right? I don't say social media is not works, but it's a little bit longer. You have to constantly update the social media, right? We do have a social media content officer. Aaron is helping you guys, and also Ian is our marketing companies promoting all the social information with updates all the time, and you can posting to people so people can start follow. It takes some time to building the traffic and the clicks and the viewers. But as long as you're doing, let's say, once a week, right, or maybe 2 times a week, so you slowly will gain the traffics, and people will have some feedback. Also, remember, important is the content. So lots of people, they care about the content. Let's say you said, who can, this is the recent mortgage rate I got, right? And I share with your rate from which bank you got. So you create ongoing discussion, and that's also helping you to actually able to lead these leads as well, right? This is also another way.
So one quick note I'll add to that, just for social media content. The best thing you can probably do is just search other mortgage agents on social media. Find the one that like clicks with your type of personality. And you basically you can just copycat what they're doing. You don't do it word for word or style for style, but what they're doing is obviously successful. So then all you have to do is kind of learn to mimic that. I will say that we are working on getting updated content and putting out new stuff on a more regular basis. We've just had things we've had to work on prior to, so.
Yes, we will actually have a special session separately for social media content, and also how to do some little self edit videos. But we welcome if the agent have a job into Richmond Hill with a pre-scheduled arrangement. Aaron even like to helping you guys making your own videos, and it will be your personal logo, your personal name, and talk about yourself. So it's more introduction, and then you can post on your social media with the company logo. It's always free. and we will do the editing and the modification on the back end, right? I think that will help you. And I tell you recently, there are lots of ex-banker or mortgage specialist join to our company because RBCTD these days not giving to clients easily mortgage because due to the high interest rate, or some of the clients have limited income. Because of the broker channel, you are mortgage broker, so you tap into 70 plus lender, so you have more option to give to people. So likely you will get a referral from a bank officer too. So some of the branch officer, they're now able to give a mortgage to the clients, but they don't want to lose the relationship. They like to refer to you as well. And then you still can helping them to using our channel to submit a mortgage application.
Okay, thanks. So that's, yeah, lots of spots to sort of get my feet wet and put some things out there, and then you know, like anything, it just takes a little time to build over time. So thank
And
you.
the larger scale itself is, you know, there are lots of people who bought a pre-construction during the COVID, right? And there may be 150,000 units selling in GTA's Ontario every year. And some of the properties closing this year and then closing next year. And I think it's a big group of people who need a mortgage solution. I think if you're able to tap into that resource and finding your own niche market, I think it will be a great venue and a pipeline for you to do business. That's what we found out recently.
Can I ask another question? So like near my own home, there is a condo development that's going up. Is there any value in like sort of like how do you scout around a place that's being built up and offer your services there, or is that like not very highly looked upon?
Let's say because it's very convenient to your distance, and I'm pretty much sure you know the builder, this and that. So typically, there are lots of units has been sold before they get a construction finance. You need about 70% pre-sold in order to get a construction. If the building has been erect or under construction, likely they have reached to a certain percentage of sale. And I can tell you, 99.99% these people who bought a pre-construction with a mortgage pre-approval no longer valid because these are the interest rate when was a historical low. And let's say the time of closing or the building top up, likely they need to get a mortgage arranged for closing. And I mean, there are different ways you can approach these potential clients based on keyword search, or you can posting, or you can probably work on with some maybe in-house salesperson and refer some business to you or build a relationship. There's a potential, right? Because you're in an area, you have a license, we can even arrange a financing backing all the deals you have, right? One of the agent who putting a 15 unit together because this person who bought 15 units in the same building, and they had to close in 2-3 weeks. So we packaging them together and giving $8 million based on 16 million. What's it? Almost like $20 million loan to value for them to do last minute closing. So these type of the deals, it's up. It's I don't know how many, maybe $500,000 mortgage out there. You can even tap into 0.001% or building next to you. I'm sure there are tons of people who need a mortgage because they need to be closing, right?
One thing I'd like to add, if you're reaching out to clients and just more for a confidence type thing, don't just try to sell yourself as the service. You're selling the experience of the brokerage you work with, right? So, and because we have the development side and the real estate side, the Rex and other team leaders are very knowledgeable, right? So you can go to them presenting like, our brokerage knows what to do. We're in this business. We have the experience, so we know how to get this for your clients.
Yeah, so if sometimes essentially need to be a Zoom meeting, person meeting, it will definitely help. Because every developer project can be various based on their stage, their financing. You know, as a developer, they always worry, we sold 300 units, by the time closing building finish, and these people say, I don't want the property anymore because I'm not able to get a mortgage. So eventually there are also other problems as well, right? So if we're able to help in the purchase to arrange a satisfied mortgage, so it's a win-win-win situation. The agent win, the builder win, the purchasers win, right?
Fantastic. Thanks very much.
Yes. Okay, if there are any other questions, or you guys can connect to us maybe later today or tomorrow or through emails, we're always open.
I have a question.
Okay, go ahead.
Sorry, being new. I was wondering, you hear of agents offering like a referral fee to real estate agents for their service, right? Is that something we're allowed to offer?
Yes, because referral fee is typical is expense to you operates as a mortgage agent. Let's say the real estate agent also give a referral fee. Let's say you refer a potential buyer to a real estate agent and then you charge a referral fee. And the real estate agent refer a person to you, need a mortgage solution, you get a reasonable referral fee. This is for a negotiation. There are no standard, say 20%, 25%, or 15%, or 50%. So this is a law, you can do it.
Okay, no, I just had to ask. The line of business I'm in, I deal with a lot of realtors, and I'm close friends with a lot of them, and I just wondered if that was something that I could extend to them, in order to kind of get my name out there. And
of course, but I tell you, if you only give a referral fee, right, and other people give a referral fee, they don't give you kind of advantage. We always saying is we care about the service quality, is not how much, because in the end, you deal with the people, you deal with the clients. If they feel you're a people person, you can help, they can trust on you, they don't even care about referral fee. Trust me, if you can help the real estate agent to close the deal because the client need a mortgage, they will give you money to close the deal. Because if they don't give you the money to close the deal, they will lose maybe $20,000 on the commission on the real estate transaction.
oh, absolutely. Like I know customer service and working with clients one-on-one and being personalized with them is a big issue. Well, not issue, a deal. Like I deal with clients every day, and it's a matter of listening and understanding their needs and having them call you back, right? Like my line of work is all referral. I don't advertise. So it was just an option I was thinking
No,
of
the option is
to
open.
start this out and get my
Option
name
is
out there,
open,
right?
fully open, right?
It's just not, it's not something you wanna totally lead out with, right? You
Mhm.
wanna lead out with customer service and stuff like that. I have a friend who's has a real estate brokerage. And she doesn't care about my referral fee, right? She cares that I'm gonna help her clients, right?
Close the deal, because otherwise the real estate agent.
If they can close the deal, they earn more. You don't really care about the referral fee or the
Yes.
mortgage broker.
The mortgage agent,
agent.
job is helping the real estate agent to earn their commission because the deal had to be closed.
Yep. Without closing it, they don't get paid.
So
You don't get paid.
we are, you see, the real estate agent and the mortgage agent ratio is completely different. Okay, there's about 120,000 real estate agent in Ontario. But there's only hands of 15,000 mortgage agent. So typically, for one mortgage agent can serve 5 deals at any given time. But being a real estate agent, you have to constantly showing the property from A side to B side, east and the west side. And the view, the type of things, right? So our job is sitting behind the desk, a laptop, and do a deal. It's much more efficient. And if you're good, you get a lot to repeat business. Not every buyer need to buy a property every 2.5 years, but every 2.5 years, they need to get a mortgage renewal or switch mortgages, right? So,
Yes.
So if you're able to put your time and full effort, you're able to earn maybe 3 to 4 times more than an average real estate agent.
Okay.
Right?
Sorry guys, I got a quick question. So I got a client. It's an interesting situation. She's a business owner. She's actually a restaurant owner. She had the restaurant for over 10 years, I believe. Maybe close to 10 years. and she recently asked me if she could get a business loan. And she was basically rate shopping, right? She's like, if I want to get a business loan, what's the rate? What rate do I
Oh,
expect
typically,
at this
small
time?
business loan is a prime plus 2.95.
What is that, sorry?
Prime rate plus 2.95,
Okay,
right? So it's roughly like a 9.85, 9.5 for small business. But
got
you
it. Okay,
qualify the loan, this 10-year business, you have to show you have income to the CRA, right?
right. And
Like
that was
any
the
type of, you have a lease, you have to do appraisal. What type of business is 10-year? What kind of business? Retail,
it's a restaurant business.
restaurant. So restaurant, you need to do appraisal with packaging the deals, but that's a typical cost ongoing, close to 10%, 9.5 to 9.
9.5 to 10%.
Yeah,
Okay, cool. Thanks.
yeah. Glad to ask. Maybe you're gonna make another 5G today, right?
Yeah.
Yeah, so you always, with the rates, when people ask for rates, you wanna just hit them with where things are generally at for those types of things, and you say, the more information you can give me, the more we can shop the rate, right? And that will suck them into you to work further along with you, cause the more information they give you, the more they're invested in dealing with you.
Of course, yeah.
Appraisal reports are also important, right? Let's say there's 3 appraisal company goes to a restaurant. You think they will get the 3 exactly same number? Not. So A appraisal said this is $500,000. Appraisal B said a 600. Appraisal C company can be 750. Because the ratio is based on the appraisal value, it's not based on what I think or what you think. So you have 3 appraisal company, they have 3 different numbers. So working with an appraisal company or repeat the services able to maybe reasonably to get a higher appraisal value at the most interest for the clients. That's also value added, right?
Got it. Okay, cool. Thanks.
Yeah. Okay, so I'd like to end the session today, but we will continue this once a week. There are some other opportunities we can discuss in person or through phone or emails, right?
Yeah, and if you ever have anything that's pertinent that you need right away or anything, just reach out to me anytime. Via email, phone, WhatsApp, okay?
Yes. Thank you for attending.
Thank you.
Thank you, guys.
Yeah. Okay.
Thanks, guys.